What's up, everybody? Oh, my bad.
Bloopers.
Put a blooper reel.
What's good, y'all?
It's your boy Joey Cash, and you on the Pipology channel.
Pipology TV. What's up, man? We back.
What's up, man? Follow me, Loso06, man. Light skin.
Straight up, man. The light skinned dude from the group.
The
you know what I'm
light skin
saying?
trader.
Loso might sing R&B. Who knows?
Yeah, who knows?
Oh my God.
Oh, it's serious. Jealousy.
My bad.
I thought we were
Hey, bro, no auto-tune, bro. That was straight up me. My boy might drop a verse on y'all, man. Hey, what's up, man? It's your boy, Bobby Will, you know what I'm saying? Follow me on Instagram, at I am Bobby Will, Red Squad, all day, Noop, Follow Squad, y'all know what it is. Hey, man, Blue Squad is cool, you know, follow me is
Throw
cool.
that in there.
You know, hey, follow is cool,
Squad,
too, you know what I'm
man.
saying? I rock with the whole
Throw that
Divine
in there.
now, you know what I'm saying? Noop,
You have no
that's
choice.
tough. Let's just be real about it. You know what I'm saying? Let's just be real about the situation. You know what I'm saying? Hey, man. Hey, Loso, come on back, bro. We need you, bro. We need that energy, bro. Hey, man. So tonight, we got a special segment tonight, man. We did a video call with about 100 of our students, 100 of our subscribers. We talked about the Fibonacci retracement. We talked about support and resistance. We talked about sniper entries and exits on trades. We talked about consolidation zones. So we went in, bro. This is gonna be a long video. I warn y'all now, this is a 1-hour video, but there is so much content, bro. So much free games, so much content, so much information, man. I know y'all sitting at home right now. Y'all need something to watch. Check out this video, man. We coming to y'all live. This is with our traders, with our subscribers, man. Pipology TV. Let's get it. Ah. All right, so we're gonna jump into this GJ real quick. Let me find him. Where is he at? Forex bar 1, bar 2. Here we go. All right, let me kinda load up this template. I got a template in here called Naked Forex. This is just straight charts, you know what I'm saying? Let's see, 8 people have entered the waiting room. Let's see, waiting room, admit all. Yo, welcome, y'all who just joined in. We're going over right now GJ, and we about to draw some support and resistance lines on here, and then we're gonna look at a Fibonacci retracement using the Fib tool. All right, so what I like to do here is, for me, what I'm gonna start with is, I'll start with the daily, right? And the first thing you wanna do is start drawing your key levels on your daily chart. Let me see if I can get this off here. All right, cool. So the first thing you wanna do is start drawing your key levels on your daily chart. All right, so from here, what we can see with the GJ on a daily level is the GJ has been consolidating. The reason why I know that is because you see how it's bouncing up and down inside of this small range? This is a consolidation right here. So you can see the normal trading range on this. I'm trying to admit everybody to the group at the same time. So you can see the normal trading range on this is pretty wide. So if we kind of zoom out a little bit, you can see the normal trading range on this would fit into this zone right here. Hold on. It would fit into this zone right here, right? But right now it's consolidating inside of this small area right here. So this is where we're gonna focus in at. So what we're gonna do is we're gonna start by drawing some horizontal lines for some support and resistance zones right here around the current zone that it's in. All right. So right there, that's my resistance. The reason why I drew resistance right here, now I could have drawn the resistance a little bit lower and drawn it right here in this area, but I wanna respect this wick right here. So I drew my resistance zone right where this last wick is touching, right above where it touched in these multiple places. I want to respect this wick so we don't get stopped out of the market. All right. So now that we've drawn that, we're respecting that wick. We're going to come down here and we're going to draw a support line. All right. So in this support zone, I also want to respect this wick. Right? We could have drawn a little bit higher, but I want to respect the wicks, right? All right, so now that we've got that drawn on the daily chart, what we're gonna do is we're just gonna scale down. So this is how, even if you're scalping, I will always go through this routine on a pair that I'm trading. I'm going to start at the high time frame, like on a daily time frame, and I'm going to just go down on my charts. I'm just like, it's almost like you're doing your check down. You're doing your check down on your progressions. You're trying to just go chart by chart, because every time frame adds up to the next time frame. The M1 adds up to the M5. The M5 adds up to the M15. M15 adds up to the M30, 1 hour, 4 hour, 1 day. So you're basically looking for key levels on each of your charts. So if you start with your daily, then work your way down to your H4, you see how those lines are still there? Okay, boom, that's that wick that we had to respect right there. That's that wick that we had to respect right there. So all it is basically just zooming into that time frame, right? So you continue to just zoom in. So what we're gonna do now on the 4 hour, these lines are pretty much already drawn for us on the 4 hour chart. But if we wanted to get kind of just a tighter box around here, just to kind of see the zone that is currently consolidating in, we could kind of pull this up just a little bit, right? We can pull that up just a little bit. We got our 2 touches right there. Let me admit y'all in. We got our 2 touches right there. And we can pull this one down just a little bit. And we got 1, 2, 3, 4. We got almost 6 touches right there. So this is a strong support. This is a strong resistance line right here. This is a strong support line right here on the H4. And we're looking at the GJ right now, y'all. We're going to get into the fib, but we want to draw our support and resistance first. This is going to help us see. The whole thing about it is understanding where the key levels are. So you can start at the daily, you can start at the weekly if you want to. I don't really need to go that high up. The reason why is because I could already see that it's consolidating on the daily. So there's really no point of me starting with the weekly. I can just start where it's at on the day and just respect this consolidation zone. All right, so we're going to go down a little bit further now to the 1 hour. See what kind of action we got on the 1 hour. You know, and the 1 hour is hanging out right down here, but you can see we got another zone. There's another zone right in here on this 1 hour chart. So what we can do is we can go ahead and draw another key level, right? We can draw a level right here where we see we got multiple touches. Now, not only did it touch multiple times over here, this is how you can identify where the market is topping out on key zones. Look how we had a top right here. We had a touch right here. We had a touch right here. We had a touch again 3 times right here. But even prior to that, it touched over here. This is the same exact zone. You see, once you draw that line, you can see what the market has done in the past, right? So you can see where the key levels are. You had something like a doji right here. It wasn't fully a doji, but you had something like a doji here. And when that happened, you had the market shoot down, right? So that had already formed a key level right there, right? So we just want to respect the key levels. So this would be another resistance zone right here. All right. So we're going to draw another key level. All right. So boom. With this one, I got a lot of wicks right here. I'm going to go ahead and respect these wicks, right? So we got a lot of touches right about here in this area right here, right? So this is another key support zone, right? On the H1, this is another key support zone. So you see how we're kind of drawing these key levels? What these key levels are going to help us do is determine where to set our stop losses and where to set our take profits. So if you're ever looking at different trades, you're trying to figure out, oh, where should I set my stop loss at? Where should I set my take profit at? How do I know if the trade is starting to reverse? These are the type of things you want to look for with your TA. You do your top-down analysis first, and then you know where those key levels are. All right, so let's go on down to the M30 real quick. All right, so when we get down to the M30, at this point, we've kind of already drawn the levels, man. We got a level right here that we've already drawn. We got another level right in this area. So we got a resistance zone right here. We got a support zone right here that we've already drawn, right? All right, so let's talk about what's going on. Let's talk about what's going on currently, right? Let's get on down to the M15 real quick. All right, so now we down here at the M15. If we look at the M15, this right here, okay, this is one reason why I don't recommend anybody trading during this session. And people will ask, like I see people in the chat all day, like asking, what are people trading right now? What are people trading right now? What should we be trading right now? Nothing. Don't trade anything. And the reason why is because, let's go down. If we wanted to draw a zone around here, who drew on my screen? Let's go down here. All right, so we got a zone down here, right?
bring up this horizontal line, and we got one right here. All right, so when you look at this chart right here, look at how small this range is. Look at how small this range is first. You only got about 30 pips in that range, right? But look at the zone that is currently consolidating in. The zone that is currently consolidating in, that's only 23 pips. So why would I want to catch a trade in here? Why would I want to sell or buy in here when the zone is only 23 pips? And I still would have to respect the fib. I still got to respect retracement inside of this zone. I'm gonna tell you what I mean by that. So let me zoom in real quick. All right, so look at where this zone is at. This is the top of the zone right here. This is the bottom of the zone that it's currently in. You see how it's bouncing up and down in this zone? Hold on, let's pull him down just a little bit. We can actually respect this wick if we want to, but I'm gonna just do it right here. It's more touches right here. All right, so this zone that is currently bouncing around in, if we go from here to here, we're looking at only 25 pips. That is that entire zone. It is bouncing around inside of a zone that is only 25 pips. You know, and you see how much TA we had to get to just to get down to this zone. At that point, the juice isn't worth the squeeze. It isn't worth trading at this time. So that's why we don't really, like, if you're following us on signals or anything like that, like, we really don't call a lot of trades during this time frame because there's not a lot of movement in the market. There's not a lot of volume in the market. But if we wanted to do a retracement on this level, you know, just for giggles, what we would do is we would start from our swing high, which is going to be the current high, the most recent high, and then you want to do the most recent low. So you do your swing high and your swing low. So we got a swing high right there. We got a swing low right here, right? So this is how you draw your fib tool. You want to start from your high and draw it down to your lows. Start from your high, draw it down to your lows. And then what you'll notice is that you're going to see a 100 right here at the high. You're going to see a 0 down here at the low once it's drawn on your chart. All right, somebody just raised a hand. Hold on. Let me see what the hand raise was. How do I get back to the chat? Let's see, annotate more. Okay, here go the chat. All right, so Kareem said, can you hear me? Nah, everybody's muted, bro. I can't hear you, but you can type in here and I can respond to you. Oh, he said he can't hear me talking. Can y'all hear me? Can everybody hear me? Okay, bet. They said, can you do that one more time? Oh, okay, bet. So that's good. Okay. Yeah, I can draw the fib on here one more time. So let me I'll take it off the map real quick, off the chart real quick. So all you do is go to your objects list and you scroll down and it'll say Fibo right here, and then you just delete it. But I'll draw it on here one more time. So here's our zone right here. We drew the resistance, we drew our support. And so what we want to do is we want to go right here. This is where it is in your tools. You're going to see draw Fibonacci retracement. You're going to right click right here, or left click right here, my bad. Left click right there on draw Fibonacci retracement. Then it's going to make your cursor look like this. And you have a Fibo on there. And you'll start right here. And then you're going to left click and drag. Left click it and then drag it. Drag it down to your support line. Drag it from your resistance line to your support line. All right. So once you drag that from your resistance line to your support line, for us to get a little bit closer on this chart, I'm gonna just go ahead and zoom in to the M5 so we can see what's really going on. All right, so now we're on the M5 and we can see what's really going on. All right, so here's the thing that's cool about the fib. What you'll see about the fib is that the fib actually draws key levels for you. And the way it works is Fibonacci is it's basically like it's a mathematical like algorithm. It's really complex, but it defines like golden ratios and things that occur in nature. And so from a trading standpoint, trading is really, it's money movement in terms of economics, but it's also psychology in terms of traders. So traders, trading psychology, economics, it all follows natural law. So using the Fibonacci tool is really using like deep rooted like mathematical principles, right? And I don't want to get too scientific with it because I can really go there, but basically what it does is it draws out these key levels for you. So generally what you want to look for on a Fibonacci retracement, the bounce on a Fibonacci retracement normally happens right here in this zone, in the 61.8 to the 50. So if you notice, you see a lot of bouncing right here on that zone, right?
Can you zoom out for us?
Can I zoom out?
Yeah, because we can't see what you're doing now.
Oh, you can't see it? Okay, hold on.
Thank you.
What about now? Can you see it now?
Yep, that's better.
All right, perfect. All right, so look, so you're seeing these key levels, right? Y'all see me hovering over the key levels? You got the 61.8 and you got the 50.0. Let me know if y'all can see that.
Yes.
Okay, cool. All right, so you got the 61.8 and you got the 50.0. Those are your key levels on a Fibonacci retracement, right? Now these other zones are good too, but they're weaker zones, like the 23.6, the 38.2. These are weaker zones. The strongest zone is really right here between the 50 and the 61.8. So what you'll notice that price does is price normally, once it goes down to that level, once it goes down and touches the support line, you can look for it to bounce up to that 50.0 or that 61.8. So you say, well, how will I use this with trading? Well, the way you would use it with trading is, say, for example, this level has already been defined for you, right? So so once it hits this support zone, for example, okay, now you got a support level defined right here, and it hit it twice. It hit it once right here, and it hit it again right here. So at that point, if it touches 3 times, at that point, you know it's going to continue. It's going to continue its continuation up, right? So at that point, when it touched right here, or actually when it touched right here, the way you could have traded this is with a limit order. You could have said, you know what? It touched this zone twice, so I'm going to place a buy limit, a pending order. It's a pending order type, and we can look at what that looks like real quick. So I will go into here, drop down on market execution, and go to pending order, and I can set a buy limit. I say, okay, I'm going to set a buy limit. All right, so with that buy limit, I'm going to select my price. My price is what right here at the Fibonacci level. It's right here at the support level. So my price, I would go just slightly above just to make sure that my order gets triggered. So what I would do is I would set a buy limit at 132.38, right? Now, in this case, you would say, well, where do I place my stop loss? All right, so we got to back out. Let's go ahead and place the limit because we can modify it after we place it. So let's place the limit order. All right, so the next thing is, where do I place my stop loss? You have to place your stop loss at minimum. You want to place your stop loss at the next relative minimum point. Let me tell you what I mean by that. You want to look for a point where the market found support. Where was the most recent point where the market found support? And that's where you need to place your stop loss. All right, so your stop loss would go right here in this area. This would be the highest point that you could safely place a stop loss. If you place your stop loss, any higher than that, then you put yourself in a danger zone because you're not really respecting the levels, right? Now there's a level right here. If we wanted to be a little bit more aggressive, we could come up to this level right here and place our stop loss right here. We can be a little bit more aggressive, placing a stop loss right here. But we could respect the wicks, so we could place a stop loss right about there, right? Now, this is one of the reasons I would tell you guys that I wouldn't trade during this time frame, because if I have to place my stop loss right here, let's look at this real quick. This stop loss is that's almost 8 pips. That's almost an 8 pip stop loss. All right, so if I got to place a stop loss at 8 pips, that means that using proper, risk to reward ratio, I want to have at least a 1-to-1. A 1-to-1 is really light. You know what I mean? I honestly really would rather have a 1-to-2 on my trades, a 1-to-2 risk to reward ratio. So if I'm trading this and I'm placing my limit order right here, then where do I need to go in order for me to have that 1-to-1? In order for me to have a 1-to-1, I need price to go at least to this area, to the 38.2 level. If I want to have my risk to reward ratio, let me go ahead and admit them. If I want to have my risk to reward ratio at a 1-to-2, then what I'm going to do is I want to go up at least 16 pips because I got an 8 pip stop loss. So for me to get to 16 pips on this trade, it would have to go at least to the 60, at least a little bit above the 61.8. So this would be a decent scalping trade. If I place this buy limit right here, remember we said let the trades come to you. If I place the buy limit right here and I try to scalp the market, I would want to scalp it at least to the 61.8 level. So now we know where our stop loss and take profit is. My minimum stop loss has to be right here at this area, at this 132.299. So let's just call it 132.29. All right. So if we go over the trades real quick, let's see, I got a few open ones that's just running. Let's go over the trades, and that was the GJ. All right, so we go over to the GJ, so then we would set the stop loss at 132.29, and we would set the take profit right here at the, hold on, let me just do the modification, and I need to go in and grab that price. So I can use my crosshairs right here. So what I can do to see where that level is, you can drop your crosshair right on top of it, and when you do that, it's going to show you off to the side what that price is. So this price right here is the 132.52. So at the 132.52 is where I want to place my take profit. So place my TP at 132.52. Now, all in all, that wasn't quite a bad setup, you know what I'm saying? But it's just like, for that many pips, is it really worth doing that much technical analysis? This is why I don't really trade during this time frame, because it's like the amount of TA that you need to do, you know what I mean? And the market's moving so slow, like how long you think it's going to take before it even reaches my buy limit, you know? And this is on the 5-minute chart. If it's moving this slow on the 5-minute, I mean, it could take 30 minutes before it even reaches this buy limit. Is this making sense? Y'all tell me if it's making sense or if it's not making sense. Let me see in the chat. I'm tracking. Yes, it is. Makes sense. Makes sense. Bet. He says, so how does the fib work in a sell situation? Oh, in a sell situation, it would be the exact opposite. It'd be the reverse. So we can look at this as a sell. Okay, so if we want to look for a sell opportunity here, it would be the reverse. We would go back to where this high was in the market, and we would go from this high level right here, and we place a sell limit. We do the exact same thing. It'd be the opposite. We place a sell limit. And then you say, okay, well, where will my stop loss be on that sell? Well, if I did the sell, look at where my top was before then. I gotta respect this zone right here. So I would have to place my stop loss at least within this zone. So if I wanted to try to grab a sell on this, I would place a sell limit right here in this zone, but I would have to place my stop loss way up here. That's not a good trade. I wouldn't even attack this with a sell. It's just not enough room in the market for you to comfortably pick your levels and have a proper risk to reward ratio. So I wouldn't even try to attack GJ on a sell right now. Not using this type of method. Now if we wanted to wait until there's a little more volatility in the market, it does seem like the market is kind of forming a little bearish. It's got a little bearish trend going on right now. So if we did want to try to attack the market, like let's say during the London session, if we did want to attack the market during the London session, we would wait for it to get below this level. we wouldn't attack it right here at this level because we got to respect the resistance and it can bounce. We would attack it actually probably nearer to where our where we drew our stop loss at for the buy entry. We would attack it at a sell right here in this zone, because at that point we're trading it like a breakout. It's breaking out of this consolidation zone. We're going to attack it on a sell. And then guess what? And if we attack it on the sell, we've already got our key level drawn. Our next key level is right here. So if we were to catch this thing on a breakout, like let's say during the London session in the morning, it starts to break out on a sell, and we catch a sell right here, we could sell it from right here and look to take profit in this zone. That's a way better trade. Now you're looking at 34 pips potentially on your take profit, right? And in that case, we're trading like a breakout, so we just set the stop loss right here. We set a stop loss in this zone, we enter the trade here, and we set our take profit in this zone. I'm seeing questions come in the chat. What time does the London open? Yep, it opened at 3 o'clock, 3 a.m. Depending on what time zone you in. Do you only use the fib when there's a big drop or jump? No, so you can use the Fibonacci tool to do any form of retracement. You can use it in a consolidation zone. You can use it when there's a big drop. It's literally just there to help you identify key zones where the market will, can you show us the fib in a non-ranging zone? Okay, sure. Let's find a pair that's trading. It's hard to do it with these examples because we're looking at the market in real time, and it's like there's not a lot of movement happening right now. It's everything we pull up is probably going to be consolidated. All right, but let's try pulling up GU. We said we look at GU next. All right, so let me pull up GU real quick. Pull up my naked Forex. All right, so look, I mean, I won't lie to y'all, it's the same thing. We're seeing another consolidation right here with the GU. Same thing. You know? But we can trade this in different time zones. If y'all want to do something that's more like, all right, how would we day trade with it? We could day trade with it using the same concept. So on a day trade, for example, we would take our relative max, our relative high, right? And we go down to our relative low, which was right here. So we're going from high to low. All right, and now you can see the zones. See, the fib tool is really cool because it shows you the zones. So look at what happened. You had the market came down and it hit this support zone right here, right? It found support right here, and then it bounced up. Okay, market bounced up, formed a new relative high. It's not a new high, but it's a new relative high, right? So the market forms a new relative high right here. And then what happens is once the market formed that high, this is a very strong bearish reversal pattern right here. Running out of time, we've removed the 30-minute limit on your group. Okay, thank you. Thank y'all for removing the 30-minute limit. So this is a very strong bearish reversal pattern right here. So if we would have caught this on the daily a couple of days ago, well, this was the 14th, this was last Monday. So we would have caught this on the daily a few days ago, then we would have already known like, oh man, we about to be able to catch a bounce or catch a retracement. And we could have caught it at least from that level down to the 61.8. And look at how many pips that is. It got to the 61.8. I mean, look at the levels. It's right there. Like it went from here and it got to the 61.8 and it just hung out right there at the 61.8. This is why this fib tool is so powerful. It hung out right there at the 61.8. So we could have comfortably taken this trade right here on this day, rode it down to the 61.8. And if we would have caught the top of the market, we would have never been in drawdown. We could have rode it right here, caught it right here, rode it down for 168 pips. You know, when we're looking for trades, like, and we want to do like a long-term trade, this is the type of setup that we're looking for. Something that's going to offer us at least 100 pips or more. So this would have been a great setup if we would have caught it right here in this zone. But then, so what happens is it goes all the way down. It goes from here. It ends up blowing past the 50, almost down to the low. But guess what? It still stops in a zone. It's right here at the 23.6. It stopped at the 23.6. And it looks like it's bouncing a little bit. Looks like it's bouncing a little bit at the 23.6. So right now, what we'd have to do is, this isn't really giving me enough evidence to know how I should trade this right now, because it's not really at a strong key level. The 23.6 is kind of a weak level. So what we have to do is, I'll go ahead and take the fib off of here, because I'm gonna go down a little bit further into the chart. All right, object list. So we go to the fib. We're gonna delete the fib off of there. Close that out. And what we would do is, let's just go back to doing our support and resistance lines. We'll do a resistance zone right here. We'll do a support zone right here, respecting the wicks. That's the only reason I'm drawing it so low. I'm just gonna respect the wicks. All right, so we got a resistance zone right here. We got a support zone right here. All right, so we're gonna scroll on down. Okay, we got a couple people in the waiting room, admit those. All right, we're gonna scroll on down, admit all. And we getting filled up. It's 83 people on the call right now. All right, so we're gonna scroll on down. Let's go down to the H4 real quick. And let's see what's happening on that H4. All right, so currently on the H4, let's zoom out just a little bit so we can see everything. All right, so currently on the H4, you can see there's another zone that formed right in this area, right? You can even see it over here. It carries over to over here. There's a zone that formed right there. So let's go ahead, we'll draw that zone about right in here. We could go a little bit lower to touch those wicks over there, but I'll draw those on because it's more recently in this area, right? So it touched there 1, 2, 3, 4, 5, 6 times. We got 6 touches right there at that zone. All right, so we got multiple touches there. All right, so now let's go down and see where the support formed, because that's where the resistance started to form right there. All right, so let's see where's the support formed. The support has formed right in this area. All right, so boom. You see how these zones get tighter and tighter and they start to form key levels? So now you got a resistance zone here, you got a resistance zone here, you got a support zone here, you got a support zone here. I call them zones because it's not just one price. Like, it's not just a line, it's really a zone. It's kind of like a little range. It's like a little pocket. All right, so let's scroll down just a little bit further. Let's go down to that H1 and see what type of activity we're getting on the H1. Zoom out a little bit. All right, so look at what the price is doing on the H1. The H1 is still kind of respecting that price. But if you notice something here, one thing you'll notice if you're looking at it on the H1, you can see that it got stuck in this zone for a while right here. It was consolidating inside of this zone for a while. And then we had a break. This is what I'm talking about trading a breakout. It broke out of the zone, it retested it, and then it shot down. That is like a classic move for the market. Whenever you see a consolidation zone, it's what I'm talking about when you say you want to do that. You want to do it based on the breakout. And where would I have entered this trade? Well, look at where the other bottom is, the other relative bottom, right? So I would have had to enter the trade somewhere in this area. So I would have been waiting for the price to come in right here. I would have set a sell stop, admit all. Just so I know for sure that it's really a breakout, I'm being conservative, right? I would have set a sell stop in this area, and this is for this breakout when this market was going down like this. It consolidated in this zone, it broke out of the zone, it retested it, formed new resistance, and then it shot down. I would have entered the trade right here on this long wick, right around in this area on this price is where I would have entered the trade. And I would have placed my stop loss right here, right above this zone. Like probably like right in here is where I would have placed the stop loss. And then at that point, what you're looking at is from here to where the nearest zone is gone. Look at that, dude, that's 124 pips. That's 124 pips on that trade. All right, so check this out. I'm gonna remove this because we don't need to see that right now. So this horizontal line. All right, that was just an entry point. We're gonna delete that one. Because what we're seeing right now is we know that this was a consolidation zone, and we know that the market went up and retested this. So this is now a new resistance line. This line went from being support to being resistance. So now we have a resistance zone right here. We got a support zone that formed right here, right? So if we wanted to pull our fib out right now, looking at this based on the 1 hour chart, this is how we would draw it. We would say, okay, this is our resistance zone right here. This is my support zone right here. Boom. So if I want to try to catch the market on a buy, for example, on a buy would kind of be my safer option. Why is a buy my safer option? The buy is my safer option right now because I already know that the market has formed resistance. I can scroll this up a little bit. The market has formed resistance right here. You see how we got 3 touches? 1, 2, 3 touches right here. The market, formed support, my bad. The market has formed support right here. So we know that the market has formed support right here. So if the market gets back to this zone, it's a strong likelihood that it's going to bounce again, right? And that would also be, look, if we want to look at it like M's and W's, that would be the second leg of our W. We got the first leg right here. It went up, and then it came back down. So we could look at that like the second leg of a W. All right. So that would be the safer option here. We could scroll down and see if we could catch like some scalping on this one. Let's scroll down into it a little bit further. Admit. All right. So you can see what's on this one in. This one respected the 50. You see that? You see how it came down here, shot back up to that 50 zone. All right, right now it's consolidating. That's why I say this is not really a good time to trade. It's consolidating in such of a small range, right? So if I pull out my tool right here and I can see where the last low was and where the last high was, that's 6 pips. You know, this is what happens when the volume is low in the market. You get the market, and these are 30-minute candles. So this means for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Stop me. That's almost the last 6 hours, 6, 7, 8 hours. The market has been sitting inside of this zone right here. So if anybody's trading GU and you're trying to figure out why your trade is not moving, this is why the market is consolidating. It's been consolidating for hours and hours. And that's why I wouldn't trade it right now. You know, you really got to be looking to see where the key levels at. You know what I mean? Right now it's in that 23.6 zone. I told you it's a weak zone. I wouldn't make a trade based on the market being in this zone. What I want to see is if the market is going to touch here and bounce, give me a little bit of support right here and bounce, or I want to see if it's going to break through, you know? So I would just wait until the London session to really make a move on this. Wait until there's more volume in the market. See if the market wants to continue its downtrend, or if the market truly has formed support right here, in which case I would be looking for it to bounce up to at least the 50 mark. But look how many pips that is. That's beautiful. That's 73 pips on that trade, right? But we don't force trades, man. We let the market come to us. We let the market tell us which way we should go with the trade. If it starts to break out, we look for a sell. If we catch it right here and it bounces, we look for a buy. Let's see. I got trades on in the profit. Just monitoring those. All right, I'm gonna open the line up for y'all to ask questions. That's kind of like that's the basic rundown on those two pairs. Let me jump over to the chat. How accurate would you say the fib indicator is, and what other indicators do you use with it for better analysis? So as far as accuracy on the fib, the fib is really good for understanding where the levels are. I wouldn't necessarily use it to place trades. I would just use it as more of a confluence. I would use it to monitor what the market is doing. So you really want to look at what is the market behavior at those key levels. And it says, what are the strong key levels? The strong key levels are the 100, the 0, the 50, and the 61.8. Those are the strong key levels.
You trading right now? UC?
Am I trading which one?
The UC?
The UC. Nah, that's a buy limit. That's a limit order.
Oh, it's about, okay.
Yeah, that's a limit. That's a pending order.
Okay.
Yep. And this is a demo account, by the way. This isn't my live account. This is a demo account. So all of these, like, I use this account mostly to back test strategies. So like we told y'all, we're working on this software alert system. So normally when I get, you know, out of my key area for trading, if I don't get up in time to catch the beginning of the London zone, the London session. So there's a lot of volatility like right at the beginning of the London session. If I don't get up early enough to catch the volatility in the London session, I'll normally wait until the New York session opens. And I'll only trade the first half of the New York session, because what I realized is in the second half of the New York session, the volume starts to decrease in the market. You start to see a whole lot of consolidation in the market. So normally from the hours of like 7 a.m. CST to around Central Standard Time, from 11 a.m. Central Standard Time to around, 7 a.m. Central Standard Time to around 11 a.m. Central Standard Time, that's really when I'm the most active in the market. 7 a.m. to 11 a.m. I'm getting that overlap of the New York session and the London session. I'm getting the first half of the New York session. That's when I'm seeing the most volume in the market. That's when I can get in the market and I can really see which direction my trades are going. You know, the only time that you might see us like placing a trade at this time of the day is if we see something, if we see like some major price action at a key level, then we might decide to go ahead and jump into the market. Now one thing y'all asked me about specific indicators. So I use a ton of different indicators. But when I'm doing this, like typically when I'm doing my top-down analysis though, I like to do it with no indicators, because the first thing I want to do is understand where are the key levels. Then I'm using the indicators for confluence. So I'm using the indicators to basically give me more evidence. Like that's what we're doing. Like as traders, we are reading these charts and we're collecting evidence. We're collecting evidence that there's going to be a price jump, or we're collecting evidence that there's going to be a price drop. So what we do with these indicators is we're just stacking. We're stacking evidence. We're stacking the odds in our favor that we're making the correct play on where the price is going. So for something like this, we can go ahead and pull out the alligator. That's one of my favorite tools right now. We go ahead and pull out the alligator indicator. So let's put the gator on there and see what we're looking at when we put the gator on there.
What time frame do you recommend the gator to be used on?
So to me, it really depends on how long you want to hold the trade. So if you're looking to do more of like a day trade or swing trade, and we can talk time frames real quick. So like if you're looking to more day trade or swing trade, then you want to look for the alligator on the daily chart or the 4-hour chart. The daily and the 4-hour are really your day trading time frames, right? 1 hour is more of like a chart that you could use for entry for a daily or for the 1 hour. For the daily or for the 4-hour. But the 4-hour and the daily are really your day trading time frames. Now, if you're looking to do something more intraday, or you're looking for more of a scalping opportunity, then I would say trade it on the M30. Hold on, let me make these lines a little thicker because I like to see this a little bit better. Hold on, width on the lines. All right. Boom. So now my lines are a little bit wider. I can see them a little bit better. All right. So what I like to look at on here is if I'm trading like intraday, like I'm doing like, I'm in the middle of a session or whatever, I'm typically looking for trades on the M30. So I'm typically looking at the M30. That's the time frame that I'm trading. So that means that's really where I'm looking for my key levels at. That's where I'm looking for my price action at. But I'm going to start marking up my charts on the H4. The reason why I start on the H4 is because my rule of thumb is 2 levels above, 2 time frames above, and 2 time frames below. So if I'm trading the M30, I first want to see where is the market moving on the H4. What is the price action on the H4? Let me draw those zones on the H4. Here's my zone on the H4. I got a resistance zone here. I got a support zone here. I got another mini resistance zone here. So I want to draw all those key levels on the H4 before I even start trading the M30. I'm going to draw all my key levels on the H4. Then I'm going to scroll down to the M30. All right. Now, once I get down to the M30, I'm actually looking for my entry points on the M5. That's why I say two above and 2 below. I'm trading the M30, meaning that I'm looking for intraday opportunities with 30 minutes to an hour to 2 hours long. That's how long I'm going to stay in that trade. And I only really have to check my phone every 15 to 30 minutes if I'm just, stalking the trade. So, but I want to enter this on the M5. The reason why I'm going to go down to the M5 is, like I told you, this M5 time frame adds up to this 15-minute and this 30-minute time frame. So I can look at what price is doing on the M5. I can get down here and really get down to the nitty-gritty of what's going on with the price action. And these candles don't take very long to form. So once I start seeing these candles forming on the M5, I can see where my best entry points are, right? So say, for example, I'm trading this alligator on the M5. One thing that I would look at is I don't necessarily wait for these lines to cross. See, my early indication that the line is going to cross is if I get a bar that closes. If I get a candlestick that closes below one of these moving averages, then that's an early indication to me that this price is getting ready to go down. Right? Right now, it doesn't really apply as much because we're in a consolidation zone. But say, for example, if we were trading this back on the 21st, what was this? Let's see. I guess this was earlier today. So if we were trading this earlier today, then what we would have been doing is looking at this on the 5-minute time frame, right? And what I would have looked for my early indication to enter the market is I'm looking for a candle to close below these moving averages. So this candlestick right here, this one right here would have been my confirmation. Even before the alligator crossed, this candlestick right here was my confirmation to enter the trade. And at that point, once I enter that trade, I'm going to stay in that trade until I see a candlestick close above this blue line, right? So for example, I would have entered the trade right here and I wouldn't have exited until right here when I saw a candlestick close above the blue line. Or this, well, I guess it would be this one. So this candlestick would have closed above the blue line.
Can you zoom in a little?
And that's 90 pips. Yeah, I can zoom in a little bit. Is that better?
Okay, thank you.
Yeah, so right here, this is what I'm talking about. You see how you got a candlestick that closes below? Oh, dang, he's doing that auto zoom thing.
Oh, okay, yeah, that's perfect.
Let me turn this auto zoom off real quick. Chart auto scroll. I don't need to do that. All right. So this is the candlestick that I'm talking about. This would have been my confirmation candle right here. I got a red candle closed below the moving averages. So that already tells me that this alligator is about to cross. So now that I know the alligator is about to cross, I'm going to go ahead and jump in this trade. And I'm going to wait until I see a green candle that's going to close above. I probably would have got out on this one just because it started to move right there. But even if I stayed in until I saw one close above, this would have been my exit point on the trade. Right?
Bobby.
What you'll also see is that's right below that 50 mark. So I either could have gotten out on the 50 or I could have stayed in and got out right here on this candle. I had a question.
Appreciate it.
No problem.
Yes, can you hear me?
Yep.
Your entry point though shows that the moving averages are in a little consolidation. So
Yep.
would you have entered there? Because there's really no indication that the price action is below the moving averages at that entry point. Seems to me like maybe about 4 or 5 candles down. So I'm just wondering, why would you enter there where it's a lot of consolidation?
So that's a good question. The reason why is because, let me show you. So this is, I wouldn't have entered at this candle. I would have entered right after it. So this candle would have been my confirmation to enter the market. But if you notice, this is the consolidation zone right here. Hold on. So this is the top of the zone, right? This is the bottom of the zone. Hold on. I don't want a vertical line. This is the bottom of the zone right here, right in this area. So this candle closed right at the consolidation zone, right at the bottom of the consolidation zone. But for me, the fact that it closed below this moving average, that's typically an indication that this green line is about to cross the other moving averages. That's just what I've noticed in the market. So if you want to get in early, that's why I say I find my entry points on the M5, because if you want to jump in the trade early, then you can go ahead and jump in right here when you see this candle close below, because that's your early indication that this green line is about to cross.
Got it. Okay.
Yep. But yeah, to your point, I mean, if you wanted to be a little bit more conservative with your entry, which is only a few more pips away, I mean, in this case, hang on. So the entry is only a few more pips away. You could have waited for the cross, which happened right here. But that cross actually happens at this candlestick. So if you would have got in there, you would have got in right here around this candlestick, and you would have seen a little bit of drawdown, probably about close to 10 or 11 pips in drawdown. You would have been in a trade right here. This would make a lot of traders nervous. You 10 or 11 pips in drawdown, you're like, I don't know. It depends on my lot size. You know what I mean? But that's why I say that's why I say you find your best entries on the M5. Because if I entered here, then the most drawdown I would have saw on this trade was only like 5 pips. I would have saw 5 pips worth of drawdown. The rest of the time, I'm in profit. I'm in profit the whole time.
Okay.
All right. Is that making sense?
Can I ask a question real quick?
Yep.
What would you do? What if you were looking at it not on the 30, but on the 15? Would you still use the 5?
On the 15, I would jump down to the 1.
Okay.
You can still use the 5, but it's so close, it's so tight together at that point. I always like to go 2 below.
Okay.
I always like to go 2 below because I'm looking to be in the least amount of drawdown as possible. And this is for scalping. So I'm looking to be in the least amount of drawdown as possible. So I would be looking for my entry point on the M1, because what's cool about these time frames is once you really learn how to read, like the M1, for example, you can clearly see trends forming on the M1. Like you can clearly see that this is a downtrend. And the reason why you can tell that it's a downtrend is because look at this. You got a high right here, right? Then you got a low. Then you got a lower high. Then you got a lower low. Then you got a lower high. Then you got a lower low. You see that?
Yeah.
Now, once you start seeing these highs and lows occurring at around the same price levels, that's when you can see that's your early indication that the consolidation is about to happen. Like right when the price did this, and then it went and formed another high that was around the same height as the previous high, and then the next low was around the same low as the previous low. That was my early warning that the market was consolidating. It started consolidating right here, right? It consolidated, and then we got the drop.
Bobby.
Yep.
I have two questions. One, are you guys going to be posting this video so we can go back to it and view it again?
Absolutely. This whole call is being recorded. So I don't know where I'm going to post it at yet, but it will be posted.
Okay, great. And then another question, would you be able to give us another example of the alligator, maybe doing it on a buy instead of a sell?
Yeah, let me try to find one on this chart. And if I can find one on this chart, then we'll do it.
Thanks.
Yeah, this GU has been selling and selling and selling. Let's see if we can find a good buy on this chart. That would have been a pretty decent one right here. So this is me entering in on the M1 on a scalp, right? Looking for a buy here, right? I told y'all what I'm looking for is I'm looking for a candle to close above the moving averages. Once I see a candle close above the moving averages, that's my early indication that this green line is about to cross the red line and the blue line. And it happened. Right after this candle closed, look what happened. 2-3 candles later, we had the green line cross the red line and the blue line. So it's the same concept. So that's why I like to enter on the lower time frames, because I'm able to see those candlesticks close. And then once I see them close above that moving average, that gives me an early indication to go ahead and jump into that trade. So I would have got in, for example, on this trade, I would have got in on this green candle right here. And getting in on this green candle, let me draw a horizontal, a horizontal line right here. So if I get in on this candle, look at that. I was never in drawdown on this trade. I had 0 drawdown. I got in on this green candle. I waited for the market to show me the pattern that I wanted. And as soon as I saw this line cross, as soon as I saw this candlestick cross above the EMAs, then now I take this trade. I take this trade.
About how many pips is that? That doesn't look like a lot.
No, this is small. This is a small range. So it really depends on, there's 2 ways that you could look at a trade like this. So for this one, if I go with the approach of, all right, I'm gonna close my trade when this candlestick closes below, then I would have started out right here and I would have gotten out right here, right? But here's the deal, for a situation like this, and where I can tell that the market is still in an uptrend, I can clearly see that this is still trending up. I probably would have go ahead and just ride it out because I'm still in profit. I'm still in profit right here. So at this point, I'm like, okay, it's coming down a little bit, but let me see if it's gonna go past this low. This is what I'll be looking for on the M1. Like, is it gonna respect this low right here, or is it gonna go below this low? It kind of went below it for a little bit, but ultimately it closed right here, respected it. It respected this low. So, all right, I'm like, okay, cool. I got some support right here. So that would have given me confirmation to go ahead and stay in the trade. So now instead of me getting out of the trade right here in this area, I would stay in and wait till about this area. So I would have gotten in the trade here. And once I got my confirmation that the market formation was there and it formed a solid uptrend, then I'll stay until I see a candle close below that blue line. And now I'm looking at 45 pips.
Would you stock that, or would you put a stop loss where you enter just to even out in case?
Now I would still use a stop loss on this trade. That's a great question. Like, okay, I talked about not being in drawdown, but that doesn't mean I'm going to trade without a stop loss. So hold on, let me zoom back in right here. This is where we were at. It's hard for me to see it on this chart right here, unless I can kind of squeeze this a little bit. All right, you see where my key level is, right? Because I already drew it. I got a key level right here, so my stop loss would have to be right here. And that's another reason why I wouldn't have exited the trade right here, because the risk to reward ratio is off. So for example, for this trade, if I'm knowing that I'm going to place my stop loss in this key level right here at this zone, then that means that that's like a 29 pip, 28 pip, 29 pip stop loss, which means I'm looking to gain at least 29 pips on this trade. So from here, where's 29 pips at? 29 pips wouldn't have been to about this candlestick right here. So if I just set it on a 1-to-1 risk to reward ratio, and I said, all right, well, I got to risk 29 pips to comfortably take the trade at the key level, then that means I'm looking to gain 30 pips, meaning that if I would have just set a stop loss and a take profit, my take profit would have been set no lower than at this candlestick right here. So I would have either, I'm either going to catch 30 pips or I'm going to lose 30 pips on the trade.
Thanks, boss.
Yep, no problem. All right, we've been on for an hour, y'all. I can take like 2 more questions, and then I need to go check on my family.
Hey man, real quick, Bob. As far as how do we use the scanner, man? I know we used it in the Zoom call the other day, and I see that y'all put out for today.
Yep.
So how we really access that, man?
So have you already went through the free trial for it?
I did not. I started to pick it up, but I didn't know. I seen some people saying something about Trader's View and Pip Chat or something like that.
Yeah, I mean, this is for MT4. It literally what the scanner is it's an EA, it's an expert advisor for MT4, and it completely basically like customizes your entire MT4 platform. It's 100% customizable. Like, it's really cool. Like, you can do multi-time frame analysis with it. You can have it set to scan the market based on specific indicators. You can have it set to scan specific pairs. You can have it set to trigger alerts at certain times if it hits a key zone or something like that. It's super powerful. It is super duper powerful. But what I'm using it for mostly is to do multi-time frame analysis. And I would pull it up here, but it's going to take it a little while to load. So we could probably do another call about that later, but it's going to take it a little while to load. So I don't want to pull it up right now. But essentially, I would use a template just like the one you're seeing right here. But what the market scanner is going to allow me to do is see what else is going on in other pairs in the market. So say, for example, I have 3 or 4 or even 5 favorite pairs that I like to look at. I can program those into the market scanner, and I use the term program lightly. I mean, it's literally just a template. I can create a template for those in the market scanner, and then I can always see what's going on with those pairs. So say I wanted to scan them across 3 different time frames, the M5, the M30, and the H4. Well, I can see if all of those screens go green, that to me is an indication that a strong uptrend has formed in the market. And not only is it a strong uptrend, but it has momentum. Because if I've got the M5 going up at the same time that the M30 and the M and the H4 is going up, that means that the market is moving fast in that direction. And then that's what we also use that trend strength for. So we put the trend strength on there. And now if I see a trend strength above an 80, plus I see the market moving sharply in one direction, I know for sure that it's buy time. Now, what I want to do is, though, and this is why I always start with like using this top-down analysis before I even get into looking at what's going on with the trends in the market scanner, is because I still have to respect key levels. For example, the market may be moving sharply in a buy direction, but it might be right at a resistance zone. So that to me is going to say, no, hold on. I have to wait for a breakout. I can't just immediately take that trade. I have to wait for it to break out, or I have to wait to see if it's going to test the resistance and bounce. Now, the other thing that I do with the market scanner is I never trade in the opposite direction of the market scanner, because the market scanner is telling me what the prevailing trend is. So even if I see an opportunity to sell, if the trend is up, I'm not going to sell. Because for me, I have a higher probability of success on buy trades when the market is trending up than I do on sell trades. So I wouldn't be looking for a sell in a market that's trending up. I would be looking for buy opportunities.
Okay, facts, man. Appreciate that. And then so once I hit that free trial, it'll automatically just come up with my MT4, my traders way and stuff. Is that what you're saying?
You'll get it. So like it's a whole back office to it. So once you get in there on the trial, like you'll see the back office and there's instructional videos. They walk you through how to set up the templates. There's a whole webinar that you can join on and just get more information about how it works. But once you get in there to that back office, you'll see like you download it. You'll download it to your computer. You'll attach it to your MT4. And then once you attach it to your MT4, it'll show up as an EA. You drag and drop the EA on your chart, and then it starts loading everything. And then once everything's loading, then you just go through your customizations. You just customize it from there.
Shit, man. Sweet, man. Appreciate that, then.
Yep, no problem. All right, I'll take one more question. I got to drop off, y'all. Let me see what's going on in the chat. Can you make a video for configuration of the scanner? The configuration of the scanner, we can go through that. Yeah, we can do that. So I'll show y'all how I have it set up, but the scanner is so powerful that you can literally set it up to your exact trading style. So whatever your trading style is, whatever indicators you like to use, you can have the scanner set up to read those indicators. So once y'all get in there and get the back office, y'all see all of this, and they'll walk y'all through all of it through the video tutorials. are y'all creating your own EA? We are creating an expert advisor. So the alert system that we've been telling y'all about is an expert advisor. It's not an auto trader though. It's an EA that basically gives you alerts to let you know what certain market conditions are. Similar to kind of what the scanner is doing, but it's looking for like specific. It can basically look to see if multiple indicators converge with each other at the same time. He said, I've been trying to set up, but it's difficult. Yeah, it is a lot of steps. The setup is a lot of steps, but once you get it, it's really easy to use. So you just got to kind of go through it. You got to go through those videos. They have a customer support line that you can call, and they can help you walk through it as well. But yeah, it's a little tricky to set it up if you've never used something like that before. Would you use the fib with the alligator? Yeah, I mean, I use the fib to help me find my key levels. I'm using the alligator to help me find which direction the market is trending and to help me figure out where to enter the trade. So yeah, I'm using them both simultaneously. I mean, I'm using a little bit of everything. I'm using support and resistance lines. You said, what about the Ichimoku strategy? I've actually never used that strategy before. I've been hearing about it a lot lately. It's been getting really popular with a lot of people. I'm interested in back testing it, but I haven't ever used that strategy before. When will the EA be released? We're working on it. We gotta make sure that it's doing everything that we want it to do first. And before we actually release it, we'll release it as an alert system. So we'll basically give you guys access to the alert system. So it'll be like something to like complement what we're doing with signals. But then y'all also have an alert system that y'all can like basically trade with on your own. So we're gonna give that to y'all basically like on a beta test. We haven't really said like any pricing or anything like that for it. The beta test is gonna be free, so y'all just be able to use it for free. Install executables, but they're not downloading. So it's kind of tricky. I'm gonna answer this last question with the Mac. It's tricky on the Mac. I actually have an iMac right in front of me. I'm using my Lenovo right now, and I have an iMac as well. With the iMac, what I've heard is that you need to install Windows Parallels and run all of your trading software on your Parallels instance. So you're actually going to run it on the Microsoft Windows server on Parallels, and that way you don't have to deal with none of the craziness that you deal with the Mac. So you'll actually be running it on Windows on your Mac computer. All right, cool. All right, guys, it's been dope talking to y'all. Hope y'all learned a lot today. Like I said, this video is being recorded. So we will place this recording somewhere for you guys to be able to access it and watch it over and over again and kind of go through the tips and, mark up y'all charts. All right, man. Y'all have a good night, and we'll catch y'all on the AM. Peace.
Appreciate it.
Appreciate it.